Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Allie Canal. Let's get to the three things you need to know today. First up, U.S. stock futures in the red and little change following the latest read on inflation. The Fed's preferred inflation gauge, core PCE, coming in line with estimates both month over month and year over year. Still, the core figure came in at 2.9%. That's well above the Fed's 2% target. Meanwhile, Fed Governor Christopher Waller calling again for lower rates, saying he would support a cut in September and sees additional cuts over the next 3 to 6 months. Plus, the director of the Federal Housing Agency filing a second criminal referral against Fed Governor Lisa Cook. The latest filing with the Department of Justice comes as President Trump tries to oust the Fed official over allegations of mortgage fraud. But Cook has sued Trump to block the president from firing her. A federal court will hold a hearing today over Lisa Cook's removal from the Federal Reserve, and President Trump has asked a judge to deny the request by Cook. Plus, AI concerns on Wall Street. Marvell Technology shares slumping after the chipmaker reported second quarter results. A below estimate revenue forecast and disappointing numbers from its data center business weighing on those shares today. The top line letdown outweighing the company's record revenue of $2 billion, which it says was driven by AI demand for its custom chips. Let's get a check on stock futures. You're seeing all of the major indexes trading in the red today. We have the Dow down around 100 points. S&P futures are also off around 0.2%. NASDAQ futures down roughly 0.4%. And this comes as that PCE inflation report came in pretty much in line with estimates, although core PCE remains sticky. All eyes are on inflation as the Fed gears up for that September interest rate decision. And we have seen stocks at record highs. We've hit consistent records over the past week. That sets us up pretty well entering into September, which is typically a more choppy month for stocks. But let's dig in to our top stories of the day. The Fed's preferred inflation gauge in line with estimates, with core PCE rising 2.9% year over year. And Fed Governor Lisa Cook's case heading to court today after she filed a lawsuit against the Trump administration for attempting to fire her. Plus, Wall Street closing out a winning month and bracing for a historically rocky September. Joining me now is Fed correspondent Jennifer Schomburger, senior markets reporter Inez Frey, and John Hilsenrath, StoneX senior advisor. So Jen, let's start with you there on that PCE number. Again, mostly in line with expectations. We do have core at 2.9%. What does this mean when we look out to September and what we could see from the Fed with those interest rate cuts?
Yeah, Allie, I mean, look, the Fed was expecting this inflation report. They had thought it was going to come in at 2.9, and it did. It's not moving in the right direction for the hawks on the committee, right? The Jeff Schmids and the Beth Hammocks. And personal income and spending look strong as well. But Fed Chair Jay Powell said very clearly in his speech at Jackson Hole that the reasonable base case is that any inflation uptick from tariffs is likely to be a one-time increase, so something that the Fed could look through. And he said that the balance of risks are shifting. So the Fed is more concerned about risks to the downside for the labor market, right? He talked about the revisions that we saw, the big downward revisions back in July. So I said before Fed Chair Powell's speech in Jackson Hole on our air that I think it's the next jobs report, which is going to be the August jobs report out on September 5th, that's going to be the determining factor for whether the Fed cuts rates in September. And I still stick with that. We are going to get another inflation reading on CPI, a different measure of inflation on September 11th. But I think that if we do see another weaker reading for the August jobs report or downward revisions, that is probably going to sway the Fed for a rate cut. Today, I think that a rate cut is still expected at this point, barring some very sticky inflation report on CPI. And I just want to add that Governor Waller reiterated that he does see a 25 basis point rate cut in September, saying that he believes once we get revisions for July, we will see job growth go negative.
Yeah, and I am looking at the CME FedWatch tool. Currently, markets are still pricing around a 90% chance of that 25 basis point cut in September. But Inez, I want to go to you on how the markets have been reacting. We've been hitting those consistent record highs. It is the last trading day of the month. How have markets really digested all of this economic news?
This morning we saw a little bit of pairing of some losses there on the averages. As you mentioned, though, we are near record highs. We just had record highs for the S&P 500 above 6,500 yesterday. If we take a look at the dollar, it's remained relatively steady. We're looking at bonds that have been steady, but looking at the end of the month, we saw this month that where we saw some rotation, we saw some of the catch up from sectors that had been lagging. So you saw healthcare month to date that is up. You're also looking at energy. Consumer discretionary has been up, and financials has been near highs. So among the Mag 7, by the way, we saw Apple that has been playing catch up. We've seen Tesla playing catch up. Amazon is also higher for the month. So being at record highs, we are seeing a little bit of a dip in pre-market today, but really, it begs the question, will retail investors buy the dip here, as we've seen over and over that there has been dip buying?
And John, I want to bring you into the conversation here. We saw Bill Pulte, he's the director of the Federal Housing Finance Agency, launch this new criminal referral against Fed Governor Lisa Cook. At the same time, Trump is asking a judge to deny the firing injunction. The Fed seeks only a prompt ruling. How do you put this all together? And where do you think we go from here when it comes to Cook versus Trump?
Well, so a D.C. District Court this morning at 10 a.m. is going to be holding a hearing on Lisa Cook's suit against the Trump administration, and by the way, also the Fed, against this attempted firing by the president. I think Lisa Cook gets a win today with a temporary injunction by the D.C. District Court that allows her to remain on the Fed board and participate in Fed meetings until further notice. The problem that the Trump administration has with this effort to fire Ms. Cook is that there haven't really been official proceedings, hearings. There have been allegations by Bill Pulte at the FHFA, but there have been, there's been no indictment. There's been no finding by a court that Lisa Cook did anything wrong. So I think she wins a temporary injunction today. And then we go into some kind of political and legal limbo until the Supreme Court rules on this case, and until the Trump administration can establish that she actually broke a law, which they haven't done yet.
And John was just talking about that federal hearing slated for 10 a.m. this morning. Do we expect anything to come out of that, or is it just waiting for the next shoe to drop here?
Well, I think John had it right? Cook is going to ask for an injunction. She wants to keep her job as Fed governor and continue working and doing what's right for the economy. The Fed has said that they are deferring comment on her status until we see what happens with the court proceedings. So I think that's number one, what she's going to ask for today. And I think that the judge will grant that for her. She also wants the court to say that the president's firing was illegal. And she's also looking for a better definition of for cause. It'll be interesting to see whether we see anything hashed out on those mortgage allegations and whether she does actually deny having committed fraud on that front, because that is the accusation from the administration. This is probably the first step in the process, as John Hilsenrath just noted. I do think this is a Biden-appointed judge. I think that she will rule in favor, as he said, for Cook. But I think that the government will appeal, and this is very likely to go to the Supreme Court. Mm-hmm.
This is all leading to those further questions when it comes to Fed credibility, Fed independence. But another thing that markets have been watching is the AI trade. We had NVIDIA earnings earlier this week. Marvell Technologies sinking on that data center revenue miss, which is also what we saw with NVIDIA. So Inez, when you look at the AI trade more broadly, are these signs that we're potentially slowing down? And how have markets been reacting to all of this news?
Well, I mean, we have seen Wall Street analysts talking about eventually you will see some type of a slowdown from spending on AI. But as you just mentioned, I mean, you're looking at Marvel that's tanking right now in pre-market. Dell also has booked fewer sales of AI servers. So that is creating some pause in the market as far as that the AI trade isn't perhaps as strong for all the players. But nonetheless, I mean, even look, NVIDIA yesterday was down 0.8%. For NVIDIA, that is not a big move. Some would point to data center revenue coming in slightly lighter than expected. Also, some just sort of caution about at some point the spending from hyperscalers will slow. But for now, I mean, the company forecasts $3 to $4 trillion in AI infrastructure spending until through the end of this decade. So that is significant for the market, and this is what the market has been banking on, that the AI trade will continue forward. And you still have Wall Street analysts that are expecting this rally to continue, in part because you've had strong earnings, because the tariff picture is a little bit clearer now, and because you're getting presumably September rate cuts and the AI trade growth story.
Yes, lots to keep track of ahead of the Labor Day holiday. Inez, Jennifer, and John, thank you so much for joining. Coming up, we count you down to the opening bell on Wall Street. Don't go anywhere. You're watching Morning Brief on Yahoo Finance. Now time for some of today's trending tickers. We're watching Marvell, Dell, and Affirm. First up, Marvell. Shares slumping after the chipmaker reported second quarter results, a below estimate revenue forecast, and disappointing numbers from its data center business weighing on shares today. The top line letdown outweighing the company's record revenue of $2 billion, which it says was driven by AI demand for its custom chips. Next, Dell. Shares falling after the company booked fewer sales of artificial intelligence servers than last quarter. Also, profit margins on the powerful machines falling short of analyst estimates. The need for computing to run AI tools has led to a sales boom for makers of high-powered servers like Dell, Supermicro, and HPE. But investors have been concerned about the profitability of AI servers, which do depend on expensive processors from companies like NVIDIA and AMD. Finally, Affirm. Shares jumping after the buy now, pay later firm topped fourth quarter earnings estimates and provided a strong outlook. Shares of the company have rallied 31% this year, spurred by a series of upgrades and positive analyst commentary on the stock. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Well, the Fed's preferred inflation measure, the PCE index, showing that inflation rose 2.6% from the same time a year ago. Core PCE, which strips out volatile food and energy prices, that rose 2.9%. Following that read, investors are still pricing in a September rate cut, with odds hovering at around 90%. That's according to the CME's FedWatch tool. Here with more on what that means for fixed income investors is Michael Gousset, Chief Investment Officer of Global Fixed Income at Principal Asset Management. And Michael, I'm taking a look at the bond market reaction here. You're seeing Treasury yields up around 2 basis points for the 10-year. The 30-year yields up a little bit more than that, roughly 3 basis points. What do you make of this PCE data, what this means for the Fed come September?
Yeah, good morning and thanks for having me. Bottom line, was a great report for Fed cuts. If you decompose the actual data, other than financial services price increases, which is not a surprise given stocks hitting all-time highs, overall inflation has been relatively muted. Clearly not to the Fed's 2% target level yet, but not at a worrisome enough rate that the Fed should be stopping their move towards lowering policy rates.
Now, there's been a lot of question marks when it comes to Fed independence. The battle between President Trump, Lisa Cook, still ongoing within the Fed right now. And it's been interesting to look at the bond market reaction because we really haven't seen that reflected in yields. Why is that? Why haven't we seen the jitters that we saw in April?
Yeah, I think there's a lot of unknowns right now as it relates to Governor Cook's status as a Fed official. We're going to hear, as we heard up from your prior guest, at 10 a.m., any kind of ruling around this injunction on whether or not she can stay as a policy member. But the reality is we just don't know yet. And it seems like we're likely to see some sort of noise emit from the markets if we do get her removed from the board. However, if you actually look at the underlying risks associated with her appointment, and there is a replacement put in time for, say, the December meeting, that doesn't really change current status. It doesn't really change current policy direction, which Chairman Powell made very clear at Jackson Hole, which is that policy rate is currently restrictive based on the facts that they have at hand, which is inflation, albeit a little high, is okay and has moved in the right direction. The unemployment rate continues to tick up, and we're concerned that you get an August print next week that could put even 50 basis points of cuts into the picture. So the reality is this is noisy, and it's certainly going to create some angst for investors if the Fed's independence is brought into question. It doesn't change the current trajectory of Fed policy.
Now, when it comes to inflation, it is interesting that we are seeing the long-term yields rise, the long end of the curve here. Do you think that implies that markets believe over the long term inflation will be higher and that we will see sustained increases over time?
Yeah, certainly the slope of the curve would suggest that two factors are at play. One is that inflation may not get down to the Fed's 2% target. It may be close enough for them to move on short-term policy rates, but it may not get there, implying that investors require more term premium for this higher potential inflation rate going forward. The other part is that the budget deficit continues to drag on future expectations on the health of government debt. We're going to have to see more issuance long term, and that'll be pushed out the curve. As Bennett, the Treasury Secretary, has said on a few occasions.
You mentioned the Fed's 2% target. Do we need the target at 2%, considering we just saw GDP come in very strong and the U.S. consumer seems to be holding up relatively well despite all these uncertainties?
Yeah, the Fed's mandate actually says stable prices and full employment. So 2% was the number that was attached to that. The question mark is 2.2 close enough? Is 2.5 close enough? That's always been out there. And so, no, I don't think we have to hit exactly 2%. It's not a line in the sand that must be hit at all times. But the direction of travel is most important. And over the last couple of years, we have seen inflation come down pretty materially, obviously from some of the COVID shock that impacted total inflation during the 22-23 period. But even in the last 2 years, post the COVID impact, we've seen the overall inflation rate come down by 0.8%. So inflation is continuing to improve towards that target rate. And I don't think we have to hit 2% exactly in order for the Fed to claim success.
Now, September is typically a more volatile month for stocks. We'll see how equities trade if we do see those Fed rate cuts in just a few weeks here. How defensive do you think investors should get, and how much of their allocation should be within the bond market?
Yeah, so interestingly, the credit spread markets have seen spreads continue to tighten. We're near all-time tights in terms of high yield and investment grade credit spreads, suggestive that despite the economy being a little bit slower than trend rate, that companies are doing okay, that we're seeing some pass through of the tariff impact on margins, but overall that corporate health remains robust, and that's putting in some sort of floor here on how weak you can actually see equities or how wide you can actually get credit spreads. So, from a risk perspective, we think investors will continue to move into equities. Longer term, as the Fed cuts rates, what you traditionally see is that's pretty good for fixed income overall, and that you will get that the front end outperform, but the overall curve show meaningful total return that's consistent with longer term expectations for fixed income. So I still think that fixed income offers that ballast to an equity portfolio. We've seen that investors are looking for income more and more, and that should bode well for the fixed income markets in the near term.
All right, Michael, thanks so much for your insights. Appreciate it.
Thank you.
Coming up on Yahoo Finance, opening bid, our own executive editor, Brian Sazi, joins us now. Brian, bring me that Friday energy. What's coming up on the show?
Yeah, we have lots of that Friday energy, Allie. We're going to talk a little Fed, we're going to talk a little tech, Gap CEO is going to pop on opening bid to talk about his quarter. A little bit of everything as we go into the final big summer weekend, Allie.
Big summer weekend, last trading day of the month. Can't wait.
Can't wait.
That does it for Morning Brief. Much more ahead on Yahoo Finance.